I'd just like to welcome everyone to this MGAA market briefing. And as the weather is heating up and it's nice outside, we are very appreciative of you spending the time learning a little bit more around Subsidence. So a couple of housekeeping bits and pieces, and then I'll hand over to our presenters who are from Innovation Group this time. So anyone who's attended these before, apologies, it is the same do's and don'ts. So please can I ask that cameras and microphones are kept off. As yes, I think as I usually say, we would really like to stay with you for the duration. So if we can minimise the risk of any technical hiccups, that would be perfect. And also to ask, please, if anyone has activated any AI note-taking facility, can you deactivate it, please, as we don't have everyone's permission. So that's the don'ts over and done with. The do's, I want to encourage you to interact in terms of asking questions. So please get those added on to the chat facility as we go along. So what we'll look to do is, if it's the right time to pick it up when we're going through the questions that the presenters will be addressing, we'll pick it up, or it may be that it will roll over to one of the later questions. So it's really good if you could ask them at the point that they come to mind, so that we can probably deal with them at that stage or at the end, whichever is most appropriate. So that's the do's and don'ts. A little bit of information about, you probably are aware that the session's been recorded, because I think Zoom tells you that. But what that does mean is that you will get an access to the recording. You'll get sent a link and a copy of the information that's in the slides as well. So that will come to you hopefully end of the week. And also to let you know that the session is accredited by the CII for CPD purposes. So if it fits with your training needs, you can add that to your CPD log. So that, I believe, is all of my usual housekeeping completed. So that just leaves me to introduce our topic and also our presenters. So I'm very happy to have Innovation Group here with us, sharing a presentation with us called, or sharing the market briefing with us, called Subsidence, the Past, Present and Future. And so Nikki from Innovation Group will be hosting the session, and I will hand over to her very soon to introduce her presenters and herself. So quickly, before we get started, just going to have a quick look at the objectives, just so that you know where we are in terms of what we're covering. So summarising the history of Subsidence, so you might get a bit more background into it, looking at monitoring and assessment. The role of modern technology and AI in improving the customer journey and enhancing the management of Subsidence. Evaluating what the future holds for us, those potential future impacts of Subsidence, and finishing off with a description of the evolving landscape of challenges and recognising how insurers, brokers and MGAs can proactively prepare and respond to future Subsidence. So that leaves my bit over and done with, and I can pass over to Nikki to start some introductions and the main content. So thank you very much, Nikki.
Thank you for the introduction. So good afternoon, everybody. I hope everybody can hear me. If you can't, please can you let me know. So just a very brief introduction of myself. I'm Nikki Randawa. I'm one of the key account managers at Innovation Group. I've been with Innovation Group for about 2 years, but I've been in the insurance industry for the past 20 years. So varying from operational management to supply chain and legal. Today, we have got a panel that have got about 100 years of insurance experience between them. So I'm going to encourage everyone to be asking as many questions as they possibly can in this next 40 to 45 minutes. So not least, but I'm going to introduce Craig Fuchs, our Subsidence Director. Over to you, Craig.
Thank you, Nikki. Yes, as the bio says, I've got 30 years experience, so you're probably working out now that the other two have got 70 between them, so I'm the baby of the group, but with 30 years experience. But yeah, been in subsidence and general surveying and engineering for 30 years, and now lead the subsidence team at Innovation Group. And I'll hand you over to Snay, I think, next on the list.
Good afternoon, everyone. So if you're still doing the maths, I've done 35 years of subsidence. Started in 91, headed up a substance division, looking at operations and innovative areas, and now working for innovation for the last 3 years. So continue with the maths. Over to Richard.
Yeah, I wouldn't, because I think it's over 100 if you add me in properly. Yeah. Sorry for bringing the average or making the average so high. I'm technical director at Innovation. I've been here for about 12 years, and chartered engineer and loss adjuster. I've been doing subsidence for a very long time. So I'm looking forward to sharing some of this stuff with you guys.
Okay. Right, thank you everybody. I'm going to open up some questions to our panel. I am going to encourage everyone to participate, ask questions, and make this session as interactive as possible, given subsidence surge is a pretty hot topic at the moment. So just starting off with looking at current market pressures, Snay, what are the most significant market pressures currently affecting subsidence claims, and how are these pressures being evolved over the past, let's say, few years?
Thanks, Nikki. So before I start, I'm not sure where everyone's starting point is on knowledge of subsidence. I was going to give you a really quick background so then it can play into what the challenges are. So subsidence, it's been around since the 1940s, first recognised, very primitive form. I'm hoping no one was around here except for Richard dealing with claims then. And back in the 40s, when cracks started to appear, they started to determine this was subsidence. This was an issue, and the BRE did issue a guidance, I think it was BRE number 3, and some of the guidance was very primitive in terms of what they said. And one of the things I remember in the guidance was, in terms of guidance for designer foundations, was have a look at some of the properties nearby and see if they're affected, because that will maybe impact your design of what you need to do in terms of foundations. So really, really basic guidance. The peril was introduced in the insurance industry in 1971 as a nice add-on. And as you know, in the insurance history, we've been adding perils on over the centuries. But then 1976 happened, and that is when we had the massive influx of subsidence claims. And the approach was pretty basic. I mean, back in that day, the excesses were about either 150 to 500 pounds. And if you take the average price of a property, it represents about 4%. So if you take it to today's standard, it should be about £10,000 an excess, but it's not, as we know. But back in the day when there were cracks, it was a very simplistic approach. Customers usually got their own engineers in, and they went straight into an engineered solution. So a lot of properties were underpinned. There wasn't a lot of sophistication about it. The expertise was quite variable because we relied on people who didn't do this work. And there wasn't any science around it. And then obviously the mortgage lenders, as part of their block policies, had subsidence as an offering in the peril. So after that, it was very difficult for insurers to withdraw cover even if they wanted to, and it became the norm. I mean, the approach has altered. So before I go, subsidence, what is it? It's actually changes in the ground causes downward movement to the foundations. And when the foundations move down, you get cracking in the superstructure, which is what you'll probably see a lot in the news and in the media in the next few months. Typically, we've evolved the peril in such a way and the science in how we approach things. So more recently, in the recent decades, we try to control who the experts are who are determining and looking at the claims. So we might nominate engineers that the customer goes to having a project managed service, to having almost a fully integrated service. A project managed service might be where an adjuster is the engineer and actually has the capability of dealing with the claim. And a fully integrated service is where the adjuster also may have their own laboratories, route identification, trial pits and borehole exercises. So all these other ancillary activities which we might have sprayed around the market. The other one is the focus on cause versus symptom is the change. So a science around it where when movement occurs to start thinking about what has caused the movement and how do we address the movement. So usually it's drains or trees on 90% of the cases, and in a summer subsidence surge you'll probably see a lot of clay shrinkage, tree related claims. So the idea would be to remove or reduce the trees or to try and block the influence of the trees and try and stabilize the property in a normal way. There are also other intervention techniques that have then developed in the meantime. And then we've got a vast amount of data around to give us a lot of information, a lot of predictive information about what might be happening and trends. So just taking it as to today, what are the challenges? Well, right now, I guess we do have a wealth of information, but we also have a wealth of very well-educated customers who have access to a wealth of information themselves. So we do see a very sophisticated complaint process around subsidence claims, and obviously a compensation culture can appear. The FOS did produce a report about a 10-year high complaints ratio on building claims, and two of the things that are really relevant to subsidence, one was about complaints about delayed claims, and subsidence by their very nature can take a long time to remedy, because if we take time to remove a tree, which in itself is a negotiation, once that is done, we may want to see the effects of that to stabilize the property before we repair it. So it's unlike any other peril where in fire, the fire has gone, the flood has gone, the escape of water has gone, and you're almost into remediation and stripping out. With subsidence, it may still be ongoing a year or two later while we negotiate and evidence why things have to happen. The second reason the FOS talked about complaints was because where there are third parties involved, FOS said, there was a higher chance of poor communication, delays and consumer dissatisfaction. And then in the case of subsidence, it's the high proportion of claims are down to third parties and the influence they have and the effect they have in resolving the claim for our customer. So we are highly reliant on that. It does create more communication lines, more chances for things to be miscommunicated or delayed as well. And talking about the FOS, again, just talking about today's environment, they basically say that they would like the customer to have a lasting and effective repair in terms of the resolution of the claim. And for that to happen, we need to make sure that we remove or deal with the cause in the most comprehensive manner possible. The challenge we have, I guess, is nowadays in the current climate, trying to remove trees is a very emotive subject. A lot of the more complicated claims are really the trees that are residing in local authority land or local authority controlled areas. I mean, you've probably seen in the Public Accounts Committee when they reported to the Treasury, they said that over half of the English councils in the UK face insolvency, and that's a £5 billion deficit. And if you look at the London councils, they've got a shortfall in the current fiscal year of about 500 million. So they are strapped for cash. And as a result, they've done two things to change their strategy. The first thing is they cut back on routine tree inspections. And with that means they've also cut back and stretched out their level of tree maintenance, I guess. We speak to tree surgeons, they tell us about how they've got reduced offerings for tenders for local authority trees. So we know that's happening. And part of the reason is the cash, but part of the reason is also they're trying to increase their urban green canopy. So there's a green agenda behind that. And one of the councils are now saying that they are actually rather than maintaining like a proactive schedule for tree maintenance, they're resorting to more of a response for urgent and dangerous circumstances. So it's more of a reactive thing. If you look at what Camden and Croydon have said more recently, they've said that they're scaling back on maintenance, and Ealing have even admitted that they're prioritising statutory services over green infrastructure. So imagine if you've got cash-strapped council, they're probably looking at social care and education rather than looking after trees in terms of priorities. The other area that we have is in terms of subsidence claims, we would try to recover monies off third parties. So ordinarily a third party where they have some foreseeability or some knowledge, it may be an area that we may look for recovery. We won't get those recoveries or we don't get them at the level that we used to before for the insurer because of recent case law reinforcing or strengthening the foreseeability defence that local authorities have. So that means that for insurers, the cost of the claims are increasing, as well as other inflationary pressures which sort of affect other claim classes as well. And obviously, if you're trying to remove trees, there's and it's associated with what an insurer is doing or an adjuster is doing, there's potential for reputational harm and adverse publicity. They don't want to be associated with dealing with removal of trees just to solve a problem, because the media might see it or the public may see it as insurers saving money. But ultimately, what we would do if we cannot remove a tree is we would have to underpin a property. But that is a huge amount of disruption and upheaval for the homeowner. And ultimately, we would only underpin, as we would always do, the area that's affected. But the tree still remains. So it's still not dealing with the problem. More recently, local authorities, where they have a street tree and they are considering felling, we've seen circumstances where they may be agreeable to felling. They may have to have a duty to consult. So that would mean publicising the fact that they are considering felling of this tree and they seek opinion and they go through a whole consultation process, which is quite onerous. It's almost easier for a local authority to trim a tree than to remove the tree. So there is a challenge there. The market has tried to get together in how we deal with tree-related subsidence claims, especially with the local authority. There's this thing called the Joint Mitigation Protocol. A later version has been published more recently, but the ultimate aim of and objective of the protocol would be to give us certainty about what's going to happen and when it's going to happen. And I guess at the moment, the protocol doesn't quite meet up to that level, in my opinion. So I don't think that protocol is going to be signed up by insurers in the market. So we haven't actually got, unlike with the ABI other agreements, we haven't got a mechanism and an agreement where we know what might happen. And that means as an adjuster, when we are dealing with a claim, we have a huge level of uncertainty about what might happen to local authority trees, third-party trees, when it might happen, and if it will happen. So it means that even a year or two while we're building evidence and corresponding, we haven't really got certainty around that. These are our current challenges, I would say, right now, and that creates a lot of volatility in terms of claim duration, in terms of claim spend, and in terms of, if you have duration, spend and uncertainty, in terms of the communication and how we almost reassure the customer that things are happening, or we are being quite diligent about matters and progressing matters. Just on the future, very quickly. Yes, sorry, was there a question?
Yeah, no, I was going to say there's a lot of pressures that you've highlighted there. Yes,
there are. There are a lot of pressures. It is quite a complicated claim, only in that we are dealing with so many variances. So trying to be prescriptive about how we approach things can be really challenging. Just for the future, I'm just going to, because I know the other guys are probably going to tap on some of the future. There's going to be an arms race about AI integration. As we all know, AI is touching all of our lives in so many ways. But the trick is how we best capitalize on this to create the best outcome. So don't be fooled by just gimmicks and salesy AI propositions. Look for things that really hit to the heart of what we're trying to solve. Insurers are possibly looking to probably shift their exposure where they think that some areas may be high risk, or they'll probably look at higher premiums where the data tells them, because they've got a huge amount of data which now tells them which areas are hotspots, which areas are costing money. And also now we have data on which local authorities are more responsive and which local authorities are less responsive. And that has a big effect. I think insurers are also looking at better green credentials and how they approach things. So there we are looking at things like CO2 calculations about the impact of what they do versus the impact of what they don't do. And again, looking at future, we know we got increased urban planting under the freedom of information that we've got from local authorities. We know there is more planting, but we also know from climate change committees that we've got warmer and drier summers ahead of us as well. So you can see how things might sort of end up, or how things might develop in the next few decades. And obviously there's a focus at the moment that local authorities are favouring pruning versus removal. And where that happens, there's probably space in the market to try and develop more effective intervention techniques. And I know there's some innovative work going on out there, and I think we might touch upon some of that. And I guess it's about how we might develop the protocol and how we might agree a way forward to give some certainty on claims.
You say that there's lots of changes that you've highlighted there, lots of things to be thinking about, especially in relation to the council's regime as well, pruning as opposed to removing trees, which presents its own challenges. Is there any questions that we'd like to bring to SNAE at this point, given the changes that he's highlighted from any of our delegates? Is there any questions anybody would like to raise?
There's nothing in the chat at the moment, but I'll give you a shout out, or I'll drop you a note if anything pops up when we move on to the next question.
Okay, thank you. So that takes us on nicely to our next question that I'm going to. With all these changes and a surge event on the horizon, can you, Craig, I think I'm going to ask this question to you. Can you provide some insights into the recent surge events, and how does the management of these events compare to the events that happened earlier? Example, in 2003, maybe 2002. How does that future trend? What are we foreseeing in the subsidence market over the next 5 to 10 years, given that a subsidence surge is certainly on the horizon at the moment?
Okay, thanks, Nikki. I've actually got a slide that I want to... So, I just want to give you a bit of background. The surges thus far this century are 2003, 2006, 2018, 2022. On this graph on the left-hand side, these are the notifications that came in, were submitted to claim notifications from customers to the insurers. Massive disparity between 2003, 2006. You see that in 2003 and 2006, nearly 50,000 notifications throughout that year. Move on to 2018, 2022, it was down to near on 20,000. So we often get asked the question, why on earth are surges so difficult to manage and deal with, whereas 15 years ago, you had twice as many, if not nearly 3 times as many? Well, the answer is it's all to do with the baseline. In 2003, 2002, 2004, there was, on a normal year, there would still be 30-odd thousand losses that came in, whereas now we're talking 15, 13,000. So the graph on the right-hand side represents the uplift we see during the summer and autumn period. So when I say the uplift, a baseline is the first 6 months of the year. So we look at the first 6 months of the year and we take the average during that month, and then we look at what the uplift was compared to that baseline in August, September, October, November. Now this graph on the right-hand side, on the bottom right, demonstrates in 2003 there was a 600% uplift. And 2006, it wasn't as bad. But in 2018 and 2022, it was very similar size and uplift compared to 2003. So overall, the numbers are massively reduced, but the actual uplift is fairly significant or fairly similar to 2003. So you've got a team that you've got ultimately working throughout the year, January to June, that are dealing with a certain amount of claims, and then suddenly it goes a 5-fold increase. We looked at it, and it's roughly a year's work that comes in over 2 or 3 months. So it's very, very difficult to ingest that and deal with it effectively. We've obviously got, we deploy various techniques to deal with that, but it is a challenging time. The other difference I would say between 2003, 2006 and more recent surges is that historically they were always in the southeast. So we used to move people from the north of the country down to southeast for a period of time to deal with those surge claims. In 2018 and 2022, we saw a lot more widespread subsidence. So in areas previously that we perhaps wouldn't have seen as much dry weather and clay shrinkage, we were observing that. So it made it harder that we couldn't deploy staff. But conversely, since 2006, the advent of digital assessment has come in. So that meant we didn't have to physically visit everything. We could do intelligent triage and route some of our claims to be done digitally, which obviously assisted greatly. The other aspect that I obviously get challenged with by general adjusters, they say, we never know when a storm's going to come. We never know, apart from 2 days warning. You always know that subsidence surge is going to take place at summer, autumn, etc., which is true, but we don't know which year that will be. But also, I want to just say that during different surge years, we have peak months. Well, the peak may differ between different months because it depends if we have an early summer or a late summer. So, for example, in 2006, we had an early summer, so our peak was in August, and then it rained, and that obviously moderated numbers. Whereas in 2003, we had a late summer, so October was our peak. Interesting, 18 and 22, they both in September. At the moment, based on current weather predictions and assuming it continues with this heat wave that's predicted, I anticipate a notable increase in August will be forthcoming. In terms of where we go with the future, it's quite interesting that you can see on the graph there was 12 years between 2006 and 2018 in terms of a surge event. It then suddenly reduced to 4 years, 18 to 22, and it's more and more likely looking like this could be a surge year or event or spike or whatever we did, whatever the weather brings, which indicates there's more regularity in terms of notable uplifts. What the other challenge it brings is between 22 and 25 this year, there's been 2 really benign years where the weather's been pretty poor for the summer, so the volumes haven't come in. So it's quite a challenge because obviously during those 2 years, we're not into the bringing in numerous new people to the market, etc. We haven't obviously reduced team because we still had the surge to deal with, but you're not investing in new team members, etc. But then suddenly we might have a surge. So we are looking very much forward to the future because the climate, I think Snay mentioned it about the climate committee that think by 2050, the chances of a 2018 summer is 50-50. So every other summer could be like 2018. So that means you are potentially going to get notably more surges. So what we are looking, and I'm not going to cover about AI because that's going to be probably discussed later, but what from a team's perspective, people's perspective, I'm very much looking at making team members dual qualified. So historically, we used to have people that were very much involved with the front end of a claim, diagnosing, getting the tree reduced, removed, and then we had a different party that were looking at repair. That is fine in normal business as usual, or even where surges are 10 years apart. But if we get to the position where we got surges 2-3 years apart, you may want everyone to be focusing on the front end, and then for the next 2 years, they focus on the repair end. So if we have dual qualified team members, we can deploy them where that need arises, and that obviously eases out and overcomes these peaks and troughs, basically. Are you still on mute, I think, Nikki?
Thank you, Craig, for that information regarding search. And obviously there is a lot of pressure in the subsidence market, especially with climate change, which you touched on. I did notice a question that was brought to our attention. Is that in the chat?
It is. Shall I? I'll share it with you. So the question is, if we think that there's a high risk of a surge event, is there anything that insurers can do to mitigate or defend against it?
If in terms of the policies, if the policies are in an area which is obviously clay, highly shrinkable clay, then unfortunately it's obviously very, very difficult in terms of that. There is the element, subsidence surges, as Snay said, all related to vegetation. So obviously in terms of proposal forms, it's useful to obviously check with the tree heights, the distance from the buildings, give advice regarding the management of trees. The ABI gives some good guidance on safe distance trees should be from buildings, etc. So remind customers about that. Obviously, there's certain trees they can't impact, like local authorities, but you don't want people, a common thing, putting a pyracantha right next to the house, etc., and things like that. Those are the aspects that really to try and sort of minimize those damage. And also the other factor is if they do see damage, doors being awkward to open, windows sticking, etc., early initiation to the insurer to submit a claim, so we can look at it early on to prevent that damage escalating, so we can obviously assess it, get the mitigation underway, and that will prevent that damage, because that damage could progress notably from August till October if we have a dry period.
I might just add, if that's okay, Craig, we find that during a surge, insurers obviously feel the first hit on the surge because they're getting the claim notifications. And because of the spike in the volume that insurers get, insurers tend to bring in other people from adjacent parts of their operation, from motor or liability, to do the triage. But what we find is sometimes the level of instruction, the quality of the instruction can deteriorate at a time when we probably need more quality instructions. So a bit of capturing the right information, capturing exactly what the customer is saying is the area. Sometimes we just say subsidence and then under there it just says cracks. And it's, so if it gives us a steer about it's the main house, major cracks, or it's just a rear extension or the garage or a porch, it gives us and gives Craig a chance to then triage the claims in the right way so we can give the right resource.
Thank you. I did see a further question that popped up, and I understand that was regarding flooding.
Yes.
It was about the flood re, but I think Richard would be quite a good person to, because I think you've given some.
No, I like that question. So if you think about subsidence, 60% of the claims are caused by trees on clay soils. Most of that clay is in London and the southeast of England. So subsidence surges and subsidence generally is really London-centric. So that's where the majority of the cost of the claims are incurred. The idea that insurers may walk away from subsidence and you end up with that kind of flood re is a very real possibility, I think. Particularly if we get a succession of surges and we continue to see those kind of claims costs increasing dramatically over time. So, there is a real concern that insurers may say it's too expensive and we no longer want to cover subsidence as a general peril. It'll be an interesting move to see who blinks first, but I think there's a real prospect of that.
Thank you,
Richard, is maybe going back to Snay's point, the excess hasn't changed for years, the £1,000 excess general for subsidence, and it does make you wonder if there may, bearing in mind where it started with 4% of the house price, it does make you wonder if that, before the flood re, maybe that might be looked at to eliminate some of these smaller value claims and all the notifications. So, but anyway,
yes. Get people to be less concerned.
But again, I guess the scenario is who's going to blink first. Which insurer would be bold enough to first lift their excesses up to the levels that should represent it without losing market share?
A really interesting point from all of you, and I think that really does bring us on to our next question regarding cost increases. I am going to ask Richard to come in on this question. So, inflationary pressures affecting subsidence claims. Are there any specific areas where we see the most significant costs increasing? Especially, we've talked about the excess, but is there a specific area where we see the most costs increasing in subsidence?
Thanks, Nikki. We've seen when you drill into the kind of cost increase is on subsidence. So subsidence costs have increased over the last 5 years by about 120% based on ABI figures. In the same period, all perils have increased by about 100%. So something different is happening in subsidence. And when you drill into the numbers, it's the claims involving trees that are becoming much more expensive. And that's driven by a couple of things. Removing trees is becoming very much more contentious. So if you think that maybe 30% of our claims are caused by leaking drains, nobody gets too worried about repairing a leaking drain. But if you've got a claim caused by a tree and you want that tree to be removed and it doesn't belong to the customer, then that gets very much more difficult. And what we've seen over recent years is a change in case law that means that local authorities who were once in essence had a strict liability for subsidence no longer have any liability unless they act foolishly and choose to ignore us when we come to say their trees are causing subsidence. So what we see is that the local authorities are no longer liable for the costs of subsidence, but also that means that their behaviour changes. So as they're no longer on the hook for the claim, they're much less likely to remove trees. And it's interesting when you look at the argument about tree removal, that often the insurers are painted as the villain of the piece. And I just wanted to read something. It's to do with a tree preservation order application in Cambridge. And essentially the insurer was applying to fell a protected tree. And by way of background, if the council refuses you permission to fell that tree, then they're liable to pay compensation. The council, East Cambridge, on this one said no, they weren't going to allow the tree to be removed, and so the council were advised that they could face a liability of £60,000 or £90,000 for underpinning work. And there's a lovely quote from Councillor Julia Huffer, who said, it should not be the district council's responsibility to pay for the underpinning work for the property. That should be paid by the insurance company. She said, I'd like to propose that we accept the officer's recommendation to refuse the felling of these beautiful trees. And I'd ask our legal department to fight the insurance company, if necessary, with handbags out on the green to make sure the Weasel Insurance Company do the right thing, put their hands in their pockets and pay up as they should do to look after this house. I thought it's a fantastic quote, and I was going to suggest that Craig wants to go out there with his handbag and sort them out, but I'm not sure what he's doing on that day. But it just kind of paints that picture of how it's perceived when we look to remove trees, that this whole idea of nuisance and of trees causing damage, it is lost on the general public. They just see insurance companies who are looking to save money and save costs by felling trees. And it's a really contentious issue at the moment. And that's why we're so kind of in favour of getting some agreements with local authorities to try and agree how we manage that process. And we'd actually quite welcome kind of moves to protect trees more properly so that they're not liable for compensation payments if they refuse to remove trees. So hopefully it will start to change some of that agenda and dial with those claims.
Very interesting that we do get statements like that, because they're not helpful to the insurer or to the customer at the end of the day, because costs are increasing, which is then increasing premiums overall. We have received a new question, and it is, why do we see less subsidence claims on commercial properties compared to residential?
It's simply because the cover it has been introduced more recently, and essentially we see far fewer, there's far less coverage for subsidence in comparison with domestic. But we do see an increasing trend with commercial claims. And when you look at the ABI figures, commercial subsidence claims are more expensive than domestic subsidence claims, because often you get involved in loss of rent or business interruption, as well as the subsidence issues. So I think potentially you'll see more commercial subsidence as that cover is rolled out more widely, and it will become more of an issue, I would suspect, for people that provide commercial subsidence cover.
Okay, thank you. Moving on to my next question, it's something that Sneh picked on earlier, and you picked up on AI. I think one of the questions I'd like to share, and maybe with all of you to provide some insight, is what technological advancements have there been in subsidence detection and mitigation over the past, let's say, 5 years? I'm going to open that question up to the panel. So,
I mean, so one of the areas is the data. With all AI engines, they rely on data, and the better organized the data is and the more detailed the data is, the better the insights you get. So we're seeing, as a result of that, people are becoming much more organized in how they log and create their data. And actually there's almost a bit of a warfare around getting data from other parties to give us informed decisions. So with the right data, you start to have trends around which areas are prone to which type of subsidence claims, what's the repudiation rates like. We've got things like what type of soils we have. We have the BGS data, which is publicly available through a subscription. But I mean, in IG, we have our own boreholes data as well, which probably is more granular than the BGS data in terms of soils that we have. So we can have all of this information ready. You've got things like Google, you can do interpretation of cracks, and you can build certain question types and scenarios and logic to try and work out whether you think this is a likely subsidence claim or not. And it gives us predictive information as well, data. So it could give us, based on what soil moisture deficits are like, what the season looks like, which areas are likely to move or be vulnerable first.
Okay, thank you. Is there any further insight into technological advancements, mitigation, or subsidence detection?
The only thing I would say is, I would say 10 years ago it was all physical visits, and then 5 years ago it went all digital. But we've definitely turned the dial back much more to physical visits again, especially in times when it's not a surge and perhaps the cause of diagnosis is a bit more challenging, and you cannot beat being out on site and those experts walking around the building, assessing it with spirit levels, etc. So I think, don't get me wrong, I as Sneh said, the data, etc. is fantastic, but there's still elements where you cannot be that physical aspect, and in terms of inspections on site, and also even not only the initial assessment during the ongoing claim, because they can be complex, and so therefore I don't think you can completely replace people at the moment, to be open with you. So yeah.
No. Any questions from our delegates on what has been answered so far? We're 45 minutes in. I would welcome some questioning from the delegates, if there is any.
At the moment, we haven't got any, but I have got a quick question which might give people some typing time. So I was interested, I apologize, can't remember who mentioned it, but you mentioned about early notification, and if your door's a bit sticky, you can't necessarily open the window as easily as you could do, to notify it, because the earlier you get notified, the better. How often do you find that happens?
So a common problem is summer holidays. So people go on holiday, they come back and they notice the front door sticking, and the telltale signs will be a diagonal fracture above that door, so suggesting something's moved, etc. Windows that are quite new, but you never had that problems, but suddenly, in the matter of days, it's sticking, and the key factor is subsidence. Obviously, it hits the weak points, which is the openings in walls, etc. So if there's fractures around those windows and doors and they're sticking, etc., that is a time to give consideration to it, especially if you've never had a problem with it, and especially if it's not a timber door that's affected by moisture, etc. These are the things to consider. But we do see especially in surge years, a lot of people come back from holiday and notice things that weren't there before. So it is pretty much, it's sudden, really, the sudden fracturing. We're not unduly concerned about there might be some cracking there, and it's perhaps just maybe got worse because of the heat. It's the ones, the sudden fractures that indicative of clay shrinkage subsidence, basically.
No, that's interesting. I wondered whether customers may be a little apprehensive because of the excess. And then they'll only notify it at the point that it becomes a real problem.
You hit the nail on the head there. That's the key. We don't want to, from insurer's viewpoint, the spend, etc. The earlier we can get to them and resolved, or at least try to mitigate, then that's going to minimise the damage and the cost, associated costs as well.
Yeah.
Sometimes we find notification, they see quite a dramatic, it might be a very subtle movement like Craig said, but sometimes it can be a very dramatic opening of a crack. So customers are very alarmed, very panicky. But all that's happened is that the building has moved and caught up with the ground. The ground has been shrinking away quite merrily through June, July, August, September, and possibly a crack's open, a big one in October. But they may worry that maybe a crack will develop further and get worse at the same rate. But actually all that's happened is it's caught up with the ground. And if over winter the clay starts to hydrate, it will actually start to close again, bizarrely.
Yeah, no, thank you. I'm just coming to obviously talking about claims journeys. Can you describe how the customer journey for a subsidence claim has changed over the recent years, especially with the pressures that we are actually seeing and the use of technology? How has it affected the customer? Has the subsidence claim journey changed for them in recent years? And as a result, what more can we do?
Who's that to, Nikki?
I'm going to ask Craig. I'm going to ask you.
Okay, right. Okay. Customer journey. The thing is, we're benchmarked against the likes of Amazon, Uber, etc. You get notifications when things are happening. You can track it, and you almost expect it the next day, an Amazon delivery the next day. Even if we put 50 people on a subsidence claim, there's certain aspects that we cannot progress any quicker. We said about local authority trees. Even if we're spending every day of every week on that claim, the local authority may still request certain evidence and information, which is not going to speed it up. The other thing that Snave's just mentioned about the clay rehydrates, it recovers over the winter period. So if we've got some bad damage that has occurred in September, we cannot repair it. Even if we remove the tree, we cannot repair it in October because those cracks will close and it will just ruin the works, basically. So you're going to have to wait until the next spring or the ground has fully recovered, the cracks have closed before you repair it. Irrespective if I've got 50 people dealing with that claim, I'm not going to change that timescale. But I think what is important now is that we have to understand that we need to manage expectations much better than when we've done historically. And we need to and also the other factor is a lot of people are very interested now in there's the internet, the Google, they search anything. So you talk subsidence and etc. And unfortunately, not all the information is factually correct. So we're really, really laser focused on providing process documents, video guides on what they claim and what they may expect, so they can refer to that at any point and understand what the journey is going to look like, manage expectations in terms of timescales, a case plan. If the direction of claim changes, update that case plan so people know how long things will take, etc. And I think also what I've seen in the last couple of years in particular is especially it's probably a younger generation, don't necessarily want to be called or even emailed. They want to self-serve. So they want to have access. At the weekend, they want to see what's happening on their claim by accessing our system, not actually somebody ringing them, which is bizarre from myself. I would always want to call and be to speak to someone, but they're quite comfortable and want that to be self-serve. So I think but conversely, we've got people that would still welcome that call. So we've got to really sort of modify our customer interaction to their preference and how they like to receive information, how they want to be updated, or do they just want to self-serve? So massive change over the years.
Yeah.
The other thing, Craig, is it's using technology, isn't it? So where we're using technology to give us an insight as to which customers are likely to start getting irritated because of the stage of claim and how long it's been there. So we use data and our technology, our systems to give us an insight. And the other one is it does the detection in the background, very sort of passive detection about any phrases or words that are used in correspondence, which we ought to be looking at in a more prioritized manner, because it's sort of a beginning of a grumble which might lead to dissatisfaction. So we can nip things in the bud a bit quicker. So one's a bit preemptive and one's a bit more reactive, but using technology for that. But like Craig is saying, Subsidence is vastly variant in terms of outcomes and possibilities, and it's bespoke in what we do for the customer, in each customer having the tools to do that. So like videos and guides are really essential.
Okay. Thank you for that. Any questions from our delegates upon customer journey, or any of the technology questions that you'd like us to answer?
Nothing at the moment.
Nothing at the moment. Okay, that's absolutely fine. We'll just swiftly move on to Richard. I'm going to bring in now. Richard, can I ask how and what the future of managing subsidence repair and sustainability looks like? We've got EKS sustainability. How are we addressing environmental pressures on tree protection versus removal and wider groups, given we've talked about the customer journey, we've talked about technology that is there, signposting to customers, but how can we address those issues proactively?
Yeah, I think there are a few things. So one of the changes we've seen over the last 50 odd years that you've had cover is that you've moved away from underpinning properties to mitigating, to removing trees, repairing drains. And as we've said, that's getting much more contentious nowadays. We're looking at, do we need to remove that tree? So where you've got low levels of damage, is it appropriate or proportionate to look to fell that tree? So I think the first thing we're trying to do is change the way in which we look at subsidence claims to say, okay, there's a group of claims where we can probably accept that the tree remains and we do enhanced repairs or root barriers or something to protect that property from the tree without having to get that tree out. And it's relatively low cost. There'll be more claims where that isn't appropriate, and that's where we're looking at doing different techniques. You mentioned EKS, that's kind of a proof of concept at the moment, but essentially it is quite interesting in terms of changing the amount the soil itself can shrink and swell. So instead of removing the tree to stop the ground going up and down, you change the ground, you change its properties so that it no longer moves up and down seasonally. So if you imagine a clay soil in London, high plasticity index, moves up and down a great deal. Compare that with a clay soil in Birmingham or the Midlands, low plasticity, doesn't move at all, very few claims. Essentially what you're doing is to shift the clay and get a low plasticity clay in London. So potentially it will have a huge impact on what we're able to do and how we're able to treat those claims going forward. So a really interesting time in terms of technologies that are out there that potentially will change the way in which we manage those claims, both to make them more sustainable, but also to improve the customer journey. Because, I mean, we've touched upon it in terms of subsidence being different, but if you think about a customer and you've got a local authority tree, you can't genuinely give them any real timescales for when things are going to happen. It's outside your control. You're reliant upon getting cooperation from a third party, and often they don't want to. So the customer's left in a kind of state of limbo in terms of what will happen to the tree and when will it happen, and if work does happen, will it be effective? So it is a very difficult period, but hopefully some of these techniques will help to give us different options to solve those problems.
Okay. Anything to add on that, Sneh and Craig? No?
I think it's just made a pertinent point. I think we've, I think in the industry, the last couple of years, we've recognised that historically it was a tree that, well, after the underpinning scenarios in the 80s, etc., when we all underpinned everything, and then it was tree removal. But we've now recognised that we can do a proportionate resolution in terms of reduction, providing we obviously take into account the FOS view of a lasting and effective repair. So as long as we can make sure that we can obviously reduce the tree as well as do a lasting effective repair, then obviously that is another option that we can explore, and we do readily explore now. Absolutely.
Okay, thank you. Again, I'm going to ask if there's any questions from our delegates, because I think we've only got a couple of minutes left.
We have indeed, yes. We only do have 2 minutes left. There aren't any questions, so I think what's happened is you've asked a lot of the questions that the audience have to yourself and explored lots of information in response to those questions. And yes, I was going to say we've got to thank you, but that was from us. But yeah, so we have got an feedback excellent session. So I don't think you can ask for more than that. No questions left outstanding and some really positive feedback. So I think that leaves me to thank you all from Innovation Group for your contribution today. And yes, just to let everyone know that if you do want to listen back to it, or if you do want to pass the link on to, I was going to say a friend, that's what you could do, but I actually meant a colleague. But yeah, so if you do want to share the link with colleagues who've not had the opportunity to join live, I will do my best to get that with you by the end of the week. So yes, some more positive feedback, no more questions. So I think you have answered everything that's on everyone's mind at this present time. You will get access to, as I will send the slides as well. So I think there's contact details in there if there's anything that comes to mind after this session. So yes, so thank you again to our presenters, and thank you everyone for attending on this lovely day. Or maybe that's why you needed to be here today, because
you definitely did. So thank you for the
best to be prepared.
Thank you.